Hey everybody, what's going on? It is James here, and in today's video, I'm going to talk about the overall market outlook. I'm also going to talk specifically about Bitcoin and then the NDX. So the first thing I want to talk about is this article came up today, and it's essentially talking about investors are shaking off the weak jobs data. And while this looks bullish on the surface, this is actually a symptom of a much larger issue. So if we scroll down through this article, the part that's really troubling for somebody like me who trades data and looks at statistical probabilities and all these sorts of things is this paragraph right here. It says payrolls processor ADP reported that private payrolls surprisingly declined by 32,000 in November. Economists had polled had expected an increase of 40,000 for the month. So in other words, it missed the expectations by 72,000 jobs. Despite the tough reading, traders were likely betting that the private job losses will lead the Federal Reserve to cut interest rates at its last meeting of the year. Okay, so what is happening, folks, is in the past, before 2008, markets had bullish participants and bearish participants. And typically when the economy and the underlying fundamentals were strong, then of course the market would move up because you would have more bulls than bears. But now we're living in this environment where when the economy is good, people are bullish, rightfully so. And when the economy is bad, people are still bullish because they're betting that the Fed will swoop in and save the day. And the Fed has done this a few times recently. They did it in 2008, right? They saved the market from going much, much lower. They did it in 2020 during COVID. So now people have been programmed that no matter what, you should just buy the dip. And we now have a one-sided market. And that's going to lead to some catastrophic results. So I actually went into AI and I was trying to do a little bit of research on this because I'm not all knowing. You know, I've only been in the markets 8.5 years. I wasn't around in the markets during the 1980s and 1990s. Even the dot-com bubble, while I was 18 when that happened, I hadn't been around the markets. I wasn't in the markets. My biggest concern was whether or not I was going to be able to afford a chalupa at Taco Bell. So I went and did some research on this, and I asked AI to compare the current atmosphere to other bubbles in history. And this is what it came up with. It says the closest historical parallel was Japan in the 1980s because it had a Japan can't fail mentality, kind of like the Fed can't fail. Every dip was bought religiously, and I'm not sure how you say this, Nikkei, maybe, went from 10,000 in 1984 to 38,000 in 1989. Real estates and stocks became one-way bets, peaked at 65 times earnings, which is insanity, and then lost 80% and took 35 years to recover. And remember, we talked about this in a previous video. That's 35 years to get back to those old levels, but that doesn't take into account inflation. Key difference, Japan's central bank did not intervene aggressively enough. Our Fed is way more committed. Okay. Next, we talk about the dot-com. Again, similar valuations don't matter mentality. You know, the internet's going to change everything, which it did. But of course, we had to have a crash first and come back to reality. AI, to me, is very similar. I think AI will change everything. Some things for the better, some things for the worse. But I think it's just that the market has got ahead of itself, and so it's going to have to reset. But at least bears still existed and debated the fundamentals. Now, there is no debate. It's just buy the dip. Housing in 2006 through 2008. Housing never goes down nationally. Everyone positioned the same way. Missing break equals no one could imagine it failing, but at least bad economic news was still seen as bad, right? We don't have that anymore. Now it's complete delusion. Tulip mania. Oh boy. 1637. Pure momentum, greater fool theory. Bitcoin. But at least it wasn't backed by central bank policy. Ours is institutionalized speculation. And by the way, this also goes for Bitcoin now because now we have actual governments involved in Bitcoin as well as ETFs and huge, huge companies. If you look at strategy, its stock's currently down 60 to 70% right now. That's one of the biggest buyers of Bitcoin, which we'll talk about that in a few minutes as well. The unique horror of today, every past bubble had natural skeptics and contrarians. This one has the Federal Reserve itself as the chief cheerleader and backstop. It's like tulip mania if the Dutch government guaranteed tulip prices. And I told it I was going to do a video, so it told me what to do. I don't necessarily listen to that, but that's fine. So then I went further. I don't know a lot about the Japanese stuff, right? I briefly heard about it, read about it a few times, but I wanted to kind of find out more about it. So, of course, I asked AI to tell me more about it. And essentially, we can kind of just gloss through this. You can pause the video and read it if you want to. But essentially, this was the story behind Japan back in the 1980s. What gets really crazy, though, is when you scroll down to this part, is this right here. No bears. Being bearish was considered unpatriotic or stupid. This reminds me deeply of cryptocurrency, right? People who are bearish on Bitcoin are ostracized from the community and often insulted rather than being accepted as, you know, a much necessary component of a market. It's like you're automatically seen as the bad guy if you say anything bearish about Bitcoin. And then, of course, the result here was the market peaked in 1989, dropped 48% over the next year, and then dropped 80% by 2003, which was 14 years later. Real estate fell 87% and didn't recover until 2024. Again, I'm assuming this is not counting for inflation. So they essentially lost 3 decades of, you know, growth, and there was stagnation. I think this is very, very dangerous, and I think it's very similar to what we're seeing today in the United States, and I don't at all think it's impossible for us to repeat these same mistakes. I'm not a fundamentalist guy, but my understanding is strategy took on a bunch of debt to buy Bitcoin, or sold stock, or did something to raise money to buy Bitcoin, which would be equivalent to me going out and taking out a mortgage on my house to buy Bitcoin. And some people would say, well, yeah, you should do that. No, you shouldn't. And the people that did that back in 2020, just because it worked out for them doesn't mean it's the right decision. There's entire books and there's entire studies by very, very smart people on this, how human beings are wired in a really poor way. We often automatically connect a successful outcome with a good decision and an unsuccessful outcome with a bad decision. And that's completely untrue. People get in their car and drive drunk every single day, and we should all agree that's a really bad decision. And yet most of those people will make it home without having an accident. So they had a successful result. Doesn't make the decision good. Other people do absolutely nothing wrong. They eat healthy, they exercise, they do everything they're supposed to do, and they get cancer and die. That's a terrible result. Does it mean that living a healthy lifestyle was was that bad? No, of course not. It was bad luck. Markets are the same way. If you mortgaged your house in 2020 and bought Bitcoin and got lucky and managed to cash it out, cashing it out was a good idea because you should always pay yourself and all that kind of stuff. But as far as taking that massive risk, was that a good idea? Probably not. You just got lucky. And I say that as somebody who got lucky myself, right? In 2017, I also got lucky. I was investing more than I should have. I was really gambling, thinking I was trading. I hadn't learned to trade yet. And I turned a small starting balance into multiple 6 figures through dumb luck, right? So I get it. Of course, I also lost it all, right? Because that's what happens with hodlers. If you hodl long enough, things tend to go back down. And I was hodling a bunch of alts in 2018. I paid the price for it, which is what pushed me to learn to trade for real. So again, our Fed is super committed. Japan eventually raised rates. Will our Fed? I don't know, right? We've seen that when they started to raise rates, people really pushed back hard. Global reserve currency, we can print without immediate consequences. Japan couldn't. And top 10% own 93% of stocks. So crash equals a wealth wipeout for elites, which equals political crisis. This is a big one here. Will the people in power allow the Fed to let this unwind? I think the Fed has had an unprecedented level of political pressure put on them to do the wrong thing. And I don't get involved in politics, except when it comes to markets. And politicians should not have any say on the markets. By the way, you guys probably know this already, but if you don't, there's a huge problem with politics being interfered with this, because a lot of times those in power want to be reelected. And so they're not doing what's best for the long term. They're doing what's best for themselves. And so a lot of people understood Trump, for example, and before anybody gets mad at me for mentioning Trump, we're going to throw Biden under the same bus. A lot of people, depending on their political affiliation, will look back and blame Biden for the inflation that occurred. And while Biden has a large share of credit to share in that, people seem to conveniently forget that Trump was in office in 2020, and Trump was the one that started that bus driving down the road. So Trump also played a role in that inflation. He wanted to get reelected. And if the stock market had a horrific crash and stayed down in 2020, he would have had no chance of being reelected. Now, granted, Biden, became president anyway, but Trump wasn't about to let those markets stay down because it would have completely eliminated his chances of reelection. So did he know that his actions were going to have bad consequences? That's up for debate. But he started that train, and then Biden hopped on and said, "Hold my beer," and pushed it even further. They're both completely wrong, and they both made terrible decisions for this country and, and a domino effect really for the world itself. So the warning, Japan's bubble took 4 years to inflate dramatically. Ours has been building since 2009. So the longer the distortion, the harder the snapback. So I know that's a lot to say. It's a lot to talk about. It's a lot to take in, but it is. And I'm not saying we're not short the market. That's not what I'm saying. I'm just saying you need to make sure that you have proper risk management being exercised, because the thing is nobody knows when this thing will top for sure. But when it does, the one thing that's highly likely is the crash will be historic. And it will not be fun, and it will likely not be a quick bounce that comes back in 6 or 12 months. It will likely take a long time to digest. Okay, so keep that in mind. That is a perfect segue to move into Bitcoin. We're going to look at a Bitcoin chart today because a lot of people are losing sight of the bigger picture right now. So we're going to look at this chart first, and then we're going to look at a relative strength chart. If you're getting excited because Bitcoin has bounced from 80,000 up to 94,000, which is a roughly 16.71% move, that's great. If you're excited because you took a long and you took a trade, right? And you have proper stop losses and your profit targets, congratulations to you. That's great, right? That was the demand zone that I laid out in previous videos way back in October or early November. Nothing wrong with taking a scalp trade there. However, if you're excited because you think the bottom is in and this is now guaranteed to go to a new all-time high, I would caution you to look at history. If you look back at 2021, I was posting charts showing this bear flag. People did not want to hear it. In hindsight, everyone has to accept that I was right. It was a bear flag, and it did exactly what bear flags do. It broke down, but people were very, very excited about this pump because it pumped 46%. Now, in one of my previous videos, I said, maybe it was a video for Discord or maybe it was YouTube, I don't know, but I said, this needs time to be digested. It is not something where I'm going to expect it to go down and then just do this. That would be very, very unusual. I also don't expect it to do this. That would be unusual. The expectation is we've had a big move. I mean, you have to remember, this was a $40,000, almost $45,000 move. In fact, it may have been $45,000. $45,771 move. So the market needs time to adjust. A balance has to be reachieved. Some type of equilibrium has to be reached before the market decides what it wants to do next. So if you think about this initial drop back in 2021, it fell 52.27%. This drop so far was only 36%. So there's a slight difference in the depth of the drop, but watch this. We had this peak, we had the pullback, we had a slightly higher high, we had a slightly higher low where it appeared to be, and then collapse. Peak, pullback, slightly higher high, and what appears to be a slightly higher low. What is really happening on Bitcoin right now is it is in a channel. Watch. See it? Bitcoin's in a channel. It's trading in a channel. That's what it's doing. If you expand this down, you're that. Just riding this trend line. So could it go back and make new highs? It could. But what happens oftentimes when you're in a range, which is all a channel is, just tilted, you will get indecision around the edges because some people are looking along this thinking it's going to be a long-term trend. Other people are selling it, and that creates that temporary balance in the market. So I would not be surprised to see a bounce here. In fact, one of the things I posted in Discord was I would not be looking for shorts if I was actively trading Bitcoin. That's not telling you what to do. I'm saying if I was still actively trading Bitcoin, I would not personally be looking for shorts here. I would be sitting on my hands waiting for a better setup. I also wouldn't be looking for longs right now, going to new all-time highs. I sold a lot of my Bitcoin that I still had remaining. I sold most of that Bitcoin throughout this range. I was taking profits. I don't remember my exact cost average. I think it was around 103,000. It may have been a little higher than that, but somewhere around $100,000 is my cost average. So if I wanted to right now, I could buy back everything I sold, or I could have bought it back in this dip to 80 to 85,000, right? I could buy it back right now at 93,000 and basically get roughly 10% more Bitcoin than what I had if I put all of my money back in. And maybe in hindsight, a year from now, I'll look back and be like, gosh, maybe I should have done that. But me personally, I did not do that. I didn't buy any of my Bitcoin back because I still view this as the first leg down in what will be a bear market, or what is a bear market. Technically speaking, bear markets are 20% drawdowns. I'm looking for it to do something like this. If you look back at the first drop in 2021, watch this. This first drop, not even the bear flag, but just this little drop right here, 38%. How much is this drop? 36%. So even this drop, it took about 4 to 5 weeks for it to digest that move before it decided to go lower. So the fact that we're now, roughly 2 to 3 weeks into this, that's completely normal. And it could go back up. Again, not saying it can't. I'm just saying that digestion is what's occurring right now. The market is digesting this move. It wouldn't be surprising at all to get something like this. That would not be surprising. So again, for traders, I'm not even saying you can't long it. You can do whatever you want, obviously, but I'm not even saying it's not a good long. I'm just saying if I was personally longing it, I would be longing it on a swing trade, not on a position trade that I was looking to ride to some new all-time highs. One of the main reasons that I'm not ultra bearish short term, meaning like this week, I want to run in and get to a short type of thing, is this relative strength chart on Bitcoin is doing something that it almost never does. If you look at this, it sold off, it broke the low of this range and all that, but it went way down here in RSI. In RSI, there's a lot more complexities than just oversold and overbought. People teach that, and that's not how RSI works at all. But when you're on a larger time frame, for example, like a 3-day chart, you do want to pay attention when an asset that's almost never oversold suddenly hits oversold. And so this actually got down to about 25 RSI, and it's ranging down here in that oversold territory right through here. The last time it did that was in June of 2022. And the last time it did it before that was in November and December of 2018. So some people may say that and be like, oh, okay, so a bear market's over. It's going to be a new bull market. That's what happened here. And, after this, it had a capitulation and then a new bull market. That's not what I'm saying, right? I still think it's a bear market. What I'm saying is right now it's stretched too far to the downside. And so again, if I'm trading statistical probabilities, the probability is it's due for some type of snap back. Even if it has more downside to go, in the short term, it's like a rubber band that's been pulled too far. It's just likely to snap back. And so that's why me personally, I think if anything, bears are in real trouble here. And again, maybe I'm wrong. I know I've said that several times, but I just can't stress this enough. I'm not telling you what to do. I'm just saying, me personally, I don't see the reward justifying the risk to take shorts at this position on Bitcoin. Me personally, if I want to get short on Bitcoin, again, which I don't trade Bitcoin anymore, but if I was trading Bitcoin, what I would be looking for is some type of move back up that would allow me into a short. For example, if this, can come up, sneak above this little range here on this daily chart and then sell off and leave behind a nice big wick, that's probably a sign that it was a bull trap and it could be moving back toward the bottom side of this range, in which case, if I was trading, maybe I would look for a short-term short position. But even that one, I would probably close at the bottom of this range. The funny thing is there's a huge difference between market analysis, which is, hey, I think Bitcoin's in a bear market, it's going to go much lower, and trading, which is you have to actually get the timing right? And this might pop all the way up to 100,000 again before moving down, or it might move down from here. It might grind sideways for 6 months and then move down. Who knows, right? One's a very macro outlook and one's a very specific outlook. A sports analogy might be something like, hey, I think the Chiefs will win the Super Bowl at least once in the next 10 years versus, hey, I think the Chiefs will win the Super Bowl in 2028. Those are very different things. So I think Bitcoin's in a bear market. But right now, I think it's very much in a wait and see mode. Last thing I'm going to wrap up with is this. I saw this the other day. I don't remember which news site I saw it on, but this is very, very troubling. It's something I've talked about in the past, but often goes unnoticed. So shares of strategy are down, or were down 34% in November. Bitcoin was down at that point 30% from the highs of October. And the reality is this: if Bitcoin continues to fall and strategy continues to fall, apparently they will be forced to sell some Bitcoin holdings to fund payout obligations. Now, it says it has $1.4 billion in reserve, which is enough to cover 21 months of dividend and interest. But imagine one of the biggest cheerleaders of Bitcoin suddenly starts having to sell Bitcoin. Not just one of the biggest cheerleaders, but one of the biggest hodlers of Bitcoin. That's going to put additional selling pressure on the market. So that's something to keep an eye on. If we take a quick look at the strategy chart, literally stopped dead at that 1.618 extension and then just immediately reversed. On a log chart, the move doesn't look too severe, but if you measure it out, it was 71.34%. So for every $10,000 somebody had invested in this, they dropped $7,000 over the course of that drawdown. Pretty massive. The video, depending on how I edit it, is very long. Right now I'm looking at the counter and we're closing in at almost 28 minutes. So I'll go ahead and wrap up there. Please remember that I am some guy sitting in a spare bedroom. So nothing in the video is financial advice. You should always go out and do your own due diligence and seek out professional financial advice from a licensed financial advisor for making any type of investment in cryptocurrency, the stock market, precious metals, Forex, or any other tradable asset.